Alright guys, welcome to the Quantum Code Trading Discord. This quick video is an introduction into the community, into the server, and some basic information that we expect you to know before you start interacting in the server and get the member role with access for everything else, right? So I'll try to keep it nice and short, and just go over all the information that we need to do, right? So essentially the entire point of quantum code trading is to get people and educate them and inform them to trade in a way where they can actually make money in the long term, right? Most people that I've been talking to, and basically almost every single trader that I've seen is essentially a gambler, right? In a way where, even if they make money in the short term, there's always going to be this one situation, this one day, this one trade where they're going to lose most of their money, all of the profits and then some, right? And that comes back to the understanding of the overall market. So that's that. Quick info about me. My name's Phil. I'm 23. I'm originally from Austria. I currently live in Bali. I've been traveling the world for the past 2 years, and I'm kind of settling down here for a while. And in those 2 years, I started doing business when I was like 16, 17 years old. I was playing hockey at that time, and I wanted to be a professional hockey player, but the chances were pretty slim, and that didn't want to, just have a job. So I was like, okay, got to figure something out. Started doing e-com, had my ups and downs as 16, 17 years old. And then it started going pretty well. The best month we had was around 100 grand. And on the side, we started trading with my friend, Alex, at that time, who ended up being, a partner later on. And we just started trading, and we got into this Discord group and just started posting signals. People really, really liked it. We were trading only XRP at that point. People liked it, and eventually we had a smaller private group within the Discord group, and we just started attracting people, and some of them were investors that we started working with to develop and code algorithm strategies for them to use and invest in, and that then turned into a hedge fund. And as we were doing that, as we were developing, we did so much software. We had such a strong system in software development where we could branch it out. And me and my partner Arthur Moonwalk in the Discord, we co-founded Quantum Code, which is basically a software development company that does a lot of automations, algorithms, a lot of backend stuff, and then obviously a lot of hedge fund funded projects. So that's about me, right? And the point of the Quantum Code Trading Discord is to make sure that where we can show the years and millions of dollars that we went through in order to get to the point where we are right now, and all the knowledge, skills, software assets we've accumulated, where we can show that to people, educate them to a specific level, and work with them later on, right? So when you join the Quantum Code Trading Discord, it does not matter what level you're in as a trader. We want you to have a clear plan from point A, where you are right now, to point B, where you want to go, right? And we can help you clear out an exact plan from trading with $1,000 to trading with $500,000 on a funded account, right? So we can do the entire thing for you. Well, really plan it out and then help you get there, right? So there's been many calls that we've been on, and a lot of information we've shared, but I will just give you a quick recap so you have some sort of understanding about the basic information and the basic knowledge and status we're in, and then I will also give you other videos to look at if you want to dive deeper, right? For this video, if you watch this video and stay all the way till the end, you'll be able to get the member role. And then if you want to dive deeper into the information and knowledge, then you're free to do so, right? So we had this one call like a couple days ago, really. And the name of that call was How to Improve Your Strategy 400% Overnight. And that was no exaggeration. And that's something that happened to us where, me and Alex, who's a partner in the hedge fund, we were developing strategies, and they were all, on and off. They were working, they were not working. They were not, as consistent as we wanted them to be, right? And the key here is consistency, right? Because when we had, a couple strategies and they were doing a lot of percent, and we showed them to our investors, we thought that they would be very, very happy, but they weren't. Because what they were looking at was not the profit, what they were looking at was the consistency, right? Because huge wins that are unexpected are as alarming as huge losses. It's the same thing, because what you're looking for when you're trading is predictability, it's consistency, right? And how do you get there? Well, you get there by looking at, by understanding the core market principles, how the market works, how the market behaves, and based on that, you can build your strategy off of very, very simple things. As an example, we've been looking at our dashboards. I looked at them a couple of days ago. I'm just showing them to you real quick. And these dashboards, essentially, I'll go more into detail later on, but essentially these dashboards are strategies that we're trading, right? And that's something we've developed internally. And I've been looking at those strategies and those dashboards, and I was talking with Alex, and I told him, like, the strategies that we're running, that are running the entire time, they're the most consistent strategies I've ever seen in my life, right? And he said, well, if you think about that, like, obviously they are, because they're so dumb and so simple that they have to work. And I thought about that because, yeah, they are dumb and simple, but it took us 2 years to get there, right? So the question is, okay, well, either we are, mentally handicapped, or, the simplicity is, simple but not easy to do, right? And really where it clicked for us was that when we stopped looking at strategies and, just back testing them automatically. But what we did one day, where we're like, okay, well, we have to get, to the bottom of it. And we just looked through the charts manually and went through every single trade manually. And then we understood the strategy, how it behaves, why it works in the first place, why it doesn't work. And based on that, it clicked for us. And, 1 week later, 2 weeks later, we had the strategies that we're trading right now. Right? So that's a very, very important part, right? Understanding the theory behind it. And most people lack that. They just trade a strategy and they don't even know why it works. And if you don't know why it works, but then how can you expect, trading it and being consistent with it, right? Because you will always have situations that you don't expect when live trading. And if you don't expect the situation, you will do an emotional action, right? You'll do an emotional reaction rather, right? Which is exactly what the market is designed to do, right? What's the market doing? Okay, what is every single market? Every single market is essentially a connection between a buyer and a seller, right? And the price, just tells you where the market is exhausted. So, and there's some people or institutions or companies that are making money in the market, meaning that they are consistently taking out money in the market, right? The market is a zero-sum game, meaning that if someone wins, right, someone gets money out, someone needs to lose money, right? And those people that are making money, they're making a lot of money consistently, right? So how does the market need to be structured in order for that cash flow to work? Well, if a small amount of people make a lot of money, then a lot of people need to lose money, right? For you, in order to make, $1 million a month in profit in the market, a lot of people trading with $1,000 need to lose $1,000, right? So the market is designed for you to do that. So when you jump in, right, and you start trading, you have a 99.99% chance, it's almost guaranteed, that you are a retail trader, right? The person that loses money, the person that's there in order to feed institutional traders, right? And why? 2 reasons. First of all, you don't understand the market dynamics. And number 2 is the market is designed to trigger emotional reactions. And with those emotional reactions, your actions are predictable and controlled. Whereas you don't know it, right? If you have a big move up, right? You have a big pump and you get excited, you know, you get hyped up, maybe you even, you know, add in at the top, things like that, right? Those actions, you know, over, you know, not even a longer period, over a couple of trades, guarantee that you will blow your account, right? And what do institutional traders do? Well, they have a set plan. First of all, they understand the market, right? But then they create a plan, they create a strategy that they follow one-to-one, right? They do the work beforehand in the strategy, and then they just execute on a strategy. And you know, because of that, they can predict that they will be consistently profitable, right? They can predict that, you know, in these this many months, I will have, you know, between this amount and this amount of profit in the market, because the strategies are consistent, right? So they find specific situations in the market, right? And they capitalize on those specific situations, they move the market, and based on that, they make money consistently, right? So what can we do, right? Well, we can't move the market with tens of millions, hundreds of millions, billions of dollars, right? We can't do that. But what we can do is find consistent patterns in the market that we capitalize on, right? And as we find those consistent patterns, we make sure that, you know, for a very, very short period of time, the probability that the price is going to go our way is pretty high, because it's an isolated situation that happens because of, you know, the core market principles that move the market, right? And as we isolate that, we make money on just that one thing, right? We don't try to overtrade, we don't try to hit every move, we're just trying to isolate a specific scenario, right? And as we do that, for example, right, I'll give you 2 examples of a strategy. When you look at the market, right, let me go to 1 hour on Bitcoin here. When you look at the market, essentially you can do one of 2 things, right? It can either be in a range and ranging, that's number 1, or number 2, it can move to another range. That's all a market does, right? It's either in a range or it's moving to another range. These blue boxes here, those are ranges, and the, you know, the big wicks or the big moves from range to range are, well, you guessed it, moves to another range, right? So how can you capitalize on it? Well, super simple market behavior, right? If you're in a range, then the likelihood of you staying in that range is higher than the likelihood that you break out, right? So if you then take, you know, another couple indicators for an alignment, and you make sure, you know, and you're at the top of the range, then you can bet that you will reverse to the bottom of the range. That's called a trend reversal strategy, right? So a strategy, you know, and that one works when you go to the top of the range and you reverse down, and then you're at the bottom of the range and then you reverse back up, and so on and so forth, right? That's a trend reversal strategy. Now, another strategy would be a trend following strategy, meaning that you're in a range, but then you break out of the range. So the chance that you will continue higher is high, and you can trade that, right? Now the interesting part comes in. If you trade a trend reversal strategy, right, what's the invalidation of the strategy? When does the strategy lose? The strategy loses when you break out of the range, right? That's when it loses, and it wins when you bounce in the range. A trend following strategy, when does it win? It wins when you break out of the range. So the win of a trend following strategy is the same as the loss of a trend reversal strategy, right? And when does the trend following strategy lose? It loses when we don't break out and we bounce in the range, which is the win of the trend reversal strategy. So these strategies are actually negatively correlated, meaning that when one strategy wins, the other one loses, and when one loses, the other one wins, right? But both strategies are profitable by themselves. What does that mean? Well, if you would trade those at the same time together, then no matter if you stay in the range or break out of the range, you will still make money, right? And that was the idea. That was something that we figured out when we were trading, and that's how we created the dashboards. For example, this is the most consistent strategy I've seen, right? If I go to the description right here, the strategy has a very, very high Sharpe ratio. It's very consistent, right? So as you can see. So this is one strategy, right? That's a trend reversal strategy. And what's interesting enough is that a trend, this is the most consistent strategy that we have. And the most profitable strategy that we have is a trend following strategy, right? So what do? Well, we trade them together in bundles. And this is something that we do here. So we just bundled them together, right? And based on that, we get to, make profit consistently. Let me go to bundle 4 here, for example. This one has 9 strategies that are negatively correlated, right? So instead of having one strategy that, can still, like every single strategy will have bad periods where it doesn't work well, right? But if you trade 9 strategies at the same time and they are negatively correlated, meaning that they're helping each other out, well, then your equity curve is going to look much better, right? It's very, very consistent. The Sharpe ratio is really good, right? So that's something that's very important. So the understanding of the market is extremely, extremely important, because if you don't understand the market in the first place, how can you expect to compete against the smartest people in the world for their money? And you don't even understand the basics, right? So then when a new trader comes in, he doesn't understand the basics and he just trades without a strategy, right? Then what that means is that when he's in a live trade, he can choose how he will react to a situation. He can over leverage, under leverage. By the way, 99% of people just use way too much leverage. And if you look at that for a longer period of time, it looks horrible. For example, these strategies that we have here, right? These bundles. We have the simulator here, right? That we use internally. Let's just say bundle 1, right? Let's just put the allocations to 100% in total and let it calculate. And as you can see, this is the normal performance of the strategy, right? 2000%, not bad, over with a 1x leverage, so no leverage at all, right? So this is fine, but even here, right, most people would struggle because, starting with 10,000 and going to 200,000 is nice, but most people don't even have $10,000 to trade with less. And because of that, it's not, even though it's a huge percentage change, the end sum of money is not enough for them, so they over leverage. Well, let me tell you what happens when you over leverage. Right now we have a 2.8 Sharpe ratio, which, if you don't know what the Sharpe ratio is, it's basically a measure to how consistent versus how much profit a strategy makes. And everything above a 1 is good, everything above a 2 is very good, and as you get closer to a 3, that's excellent, right? So this is the normal strategy, right, without leverage. Now, most people are like, okay, this is nice, but I just like to use leverage. And I've seen people use like 80x leverage, 90x leverage. The average leverage used on Binance, for example, is 20x, right? So let's just try that. Let's just try the average leverage on Binance and see what happens. Okay, so as you can see, the numbers don't even make sense, because what happens is the account blew up completely, like within a day here. right? And this is what is bound to happen. If there was an index where I could bet if someone is going to lose their entire account, I would not be trading. I would just do that. And it would be the most consistent profit I would ever make in my life. Because it's guaranteed to happen, because you need to lose profit as a retail trader and then just recharge your account in order for institutional traders to make money consistently, right? And as a retail trader, you're not just going to, load up money all the time and just lose it, right? That wouldn't make sense. What happens is that you trade your strategy, you have some great trades that give you hope, right? Some big trades that give you hope where you can justify your, longer term losses. So, let's assume you trade and you're negative, and then you have like an amazing long, right? Where you make like 500% on your, $10 account. And you're like, oh my God, this is amazing. And then you just keep losing money again, right? But as you keep losing money, you tell yourself, I know that I'm losing money now, but I had this amazing trade, so I know that it will happen again, right? I know that it's possible, so it can happen again, so I will just keep trying, right? So essentially you have this constant hope, and with that hope, you justify your constant losses, and that is the state that most people are in, and that is exactly what we're gonna fix in the Discord, right? When you're active in the Discord. So this does not make sense, right? This doesn't mean, however, that you cannot use leverage. You can use as much leverage as you want. In fact, you just need to know, right? You just need to understand the market, understand what leverage is in the first place, and if you can manage it correctly, then you can use it. For example, in this scenario, or like in these bundles, right? We essentially have a strategy above these strategies, right? That manage the allocations of them, right? And one thing that we have in there is called just a profit taking, right? And that's essentially a percentage of how much we leave on the table for the account to grow and how much we take out, right? If we take a lot of leverage, then we need to be very, very strict with what we're doing. So if I just put my profit taking to 100%, right, on 20x, well, now it looks much better, right? And I have 6.6 thousand. So from $10,000, I went to $670,000, right? So now it looks good again because, here I click the button, right? But what this button does in the background is it goes through every single trade and adjusts the amount it trades with and adjusts the amount of profit it takes and limits the risk. Because we went through those trades one by one, right, and understood, what the risk management method in those things can even be in the first place, because we understood how those strategies even make money in the first place and lose money, right? And all the strategies are here in the dashboards. You can go through all of them, right? And they're all described exactly how they work, right? And these are, these are live trading, so these are free to live trade, right? And the bundles together, as you can see, these are the trades that are profiting right now, right? So these are important things. So understanding how the market works in the first place, understanding what strategies you can trade, understanding the importance of having a strategy to begin with, right? And then understanding and improving on that strategy as you go on. Right? Those are very, very important things. And then also understanding that trading is a zero-sum game, right? Most people are losing money. Even if they say that they're making money, they're losing money because it's this fisherman syndrome, right? Where a fisherman just, catches a small fish, he goes back to the village and he'll be like, I just caught, this huge fish, right? And really it was like a mackerel or something, right? So the point is that most traders are retail traders and they lose money consistently, and your job, right, or our job collectively in the Quantum Code Trading Discord is to get you from the retail side to the institutional side. And how do we get you to the institutional side? By feeding you information and making sure that you understand what's going on in the first place, right? And we've had you know, feel free to look at the testimonial channel in the Discord. There's you know, people have been on like 2-3 live calls and they're trading completely differently, right? Hubert, for example, he watched like a couple calls and then rewatched them, and then right away he had a great Solana trade. Saifa, he came in, he was already doing really well. He was a good trader, just a talented trader, but his management was very bad. So what happened, you know, something that I could, you know, 100% predict is that he blew his account, right? But as he blew his account, he understood the risk management, and as we implemented the risk management, now he's trading it consistently up, right? He started with like $100 and then he got to like 4 or 5 grand, right? He wants to get to 100 grand, right? Things like that, right? People that haven't been trading at all before, you know, are doing setups that are on the level of professional traders, just the setups, because of the underlying understanding there, right? So those are the important things, right? There's a couple videos after this that would be great if you watched, right? You watching this video just gives you an overall, you know, understanding of what's going on in the Discord, right? We also have, you know, the strategies that I talked about here, the trend reversal, the trend following strategies. We use, you know, a bunch of indicators, especially the stochastics, and, you know, that's something, you know, special that we have as well, is that, you know, when you look at TradingView, and this is why I'm, you know, very mad at TradingView. I've been talking to them about this, but essentially also when you use the replay function, when you go through the time frames, then and when you try to backtest, you're front looking, because you get data that wouldn't be there in the first place. Because as you can see right here on this indicator, right, we have an open candle, and this last dot is moving up and down, and so on, same thing on the RSI, right? But when we close the candle, then it's going to be static, right? So looking back, I actually only get the data that we got in the last moment of that candle. The data within the candle is not available, right? So then when you're live trading it, you get so many data points that you did not backtest on, right? So what we had to do, you know, is do our own candle processing and our own pre-processing, and making sure that the candles and the data gets calculated in snapshots, right, of a minute, and in those snapshots we get the granular intra-candle data of all time frames, right? And part of that is because we have that now, right, we can create dashboards like these, right, which will tell us on the stochastic level how the changes happened, right? So this is the stochastic, right? And this is the stochastic value. And here we can see, you know, is the stochastic increasing or decreasing, right? So as we see, you know, we don't only look at is it topped or bottomed, we look at is it topped or bottomed, but is it currently increasing or decreasing, right? And we go one level deeper, which is, okay, the difference of the stochastic, right? So we're increasing and decreasing, but is that increase or decrease stronger or weaker, right? And because of that, we can predict. For example, we have our 3-hour stochastic here, right? But it would start curving up here, right? So we would see that before you would see it visually here, because we would see how the decrease would start increasing. And even though we're still decreasing here, the curve is turning positive. So we can predict where the stochastic is going to go, and this will give us another informational edge on the strategies that we trade, right? So all of these things, all of these dashboards are available for you, you know, when you're in the Discord. So yeah, that's essentially all I wanted to cover. I'm still under 30 minutes, which is great. The last thing that I need you to do is to hop on the Discord and go to the request access slide in the members, and go to this website, which is access.quantumcode.group. And in there, first of all, create an account, right? So click on that person up top, create an account with Discord, right? Which is, takes 1 second, and then go to shop and take the free access to Discord, type in your name and just click add to cart, and then you will automatically have the member role in the Discord, which will unlock all the other channels and servers and signals and all of that, and dashboards, all of that for you. So that's all I wanted to cover. Now you are somehow up to speed. We're on the same page. Enjoy the Discord, and I'll see you in there.